All right, guys, this is Abi Forest here. Yeah, today is the producer price index, which we call PPI, from the United States of America. Now, this is one of the key indicator or metrics that we use to measure inflation in America, which usually the data is being reported every month. So though we usually have PPI month over month, also we have PPI year over year. And there's another one we call core CPI, which actually excludes foods and energy. And the core CPI is we call it the change in the price of finished goods and services sold by producers, excluding food and energy. That is the core CPI. And the metric is being released every blessed month. So the one for this month now is what I traded. Yesterday was CPI, which was a consumer price index, but I traded the the retracement. Once I missed the move, so I was in a meeting, so I was not able to catch that trade. So what I did was, immediately I missed the trade, and this is a lesson for everyone. As soon as you miss a particular trade, it is in your best interest not to chase any trade. Once the trade has gone, probably you didn't meet up that trade and you are not on your seat when the data came out or the report, just hold on to your ends, because there's something I want you to understand, that for any aggressive move in the forex market, we are a technical analyst, also a fundamental analyst. Whenever you see a market that rally up to the top, that there's a particular aggression, when there's volatility, you find out that there's going to be a gap. Of course, the market is going to come back to fill up that gap. That is what people don't know. So because you want to chase that impulsive move, or that green candle, or that large red candle, if the market is going to the downside, but in this case the market is going to the upside, I'll tell you the reason why the market is going to the upside. Because understanding fundamental analysis will make you understand the direction. It will better prepare you for the direction of the market. You know that when a particular data or report is being released, you know exactly where the market is going to. And don't forget, this is an inflation report, and we know that one of the catalysts for inflation is oil and energy per se. And in this month, which was June, we are expecting that because we noticed that price of oil has reduced drastically. So that information will tell us that, okay, that means that the inflation is cooling. You understand? So we are expecting a positive news for gold. You understand? Because that news is going to be a positive news for gold. So whenever you have a positive news for gold, that means that the market is going to buy. But I'm going to explain that I'm going to explain that. But let me just explain the technical analysis for you to understand before I go to the fundamental analysis. Now, in the technical analysis, we'll find out that whenever there's an impulsive move, or probably a large green candles, rallying up to the top, of course, you should expect that the gap is going to come back to fuel it. So what you're going to do is just wait. Exactly what I did yesterday, but I didn't do that today because technically I was seeing a wedge formation from the higher time frame. So that was the reason why I left the trade very early, because whenever you're seeing a wedge formation, the market is going to start retracing back from that step. So what did I do? I went to the 15 minutes time frame, where I drew my Fibonacci retracement tool, from the swing low to the swing high. So, and if you are conversant with your chart, you would notice that on every zone, on every demand zone, there is going to be a reaction. And I want you to know that 38.2 is a demand zone on the Fibonacci retracement tool. Also 28.0 is also a demand zone. Whenever the market gets to those zones, you will see a reaction. The market is going to retrace back and probably come back to, because it has not filled the gap. But I expect at least 50% of that impulsive move back down. I'm saying a red candle is going to come down. You understand? Because you have missed that impulsive move. That's for yesterday CPI news. But if I was online, I will have traded the impulsive move, which is a green candle, because expectation is that there was, the cost of energy was reduced. Oil dropped drastically. So I will have bought that market. But as soon as that move has gone, don't chase it. Wait for another formation. and sell the market until up to like 50% of that move, because it's going to come back to fill those gaps before it start moving up to the upside. That was what I did yesterday. So now back to PPI, which is the trade of today, which I caught that impulsive move, that buy trade. What I saw is that I already talked about PPI being core PPI being the metrics used in understanding inflation, or knowing if inflation has been cooled or is still very, very high. So it gives us the change in price of finished goods and services sold by producers, excluding food and energy, which is the core PPI. But the PPI itself, it's just the price of finished goods and services sold by producer, including food and energy. That's the PPI. But the core PPI excludes food and energy. But we're not going to be talking about the core PPI. We are talking about the PPI itself. So now the PPI now, that means that that one includes food and energy. Don't forget, energy is part of the inflation story that affected that made inflation happen all over the places, which is rise in price of oil. Now that metrics came in softer than expected. Inflation has has cooled on like last month, which was 4.2%, but it has reduced, and this month now it has reduced to like 3.5% when the result came today. I think when the result came today, the PPI result was 0.3%. The actual was 0.3%. The previous was 0.6%. So inflation reduced by 0.3%. So of course we know that inflation, for inflation to reduce, that means that we should expect rally in gold. And as soon as we see that before 130, just be alert on your system. As soon as it's 130 or maybe 129 or 125, just get ready. You might have entered your trade, because maybe when because of the volatility, the broker might not allow you to enter your trade. So what you're going to do is enter before, because you already understand fundamental analysis, you already understand the direction of the market. But sometimes there are always manipulation. You understand? So that means that you need to manage your risks properly. So for me, this $100, I was able to use 0.01. I opened 4 positions, which was not that bad. But some people, of course, you can use 0.1. There's what we call lot size. If for those that know how to trade, you understand what that means. 0.1. Some people use 0.1. It's too high. So I use 0.01, which in its own gave me a reward of 1 to 3 risk to reward on this trade, which is $100 gave me like $331. Of course, I can get more than that, but discipline is very much important. You don't have to at the same time you can lose that account, but if you know how to manage your risk properly, you would be able to trade cautiously. So that is what I want to explain to you guys, how I caught the trade. So because of that, I waited for I entered the trade before 130, so I knew the market was going to go up to the upside. So I entered 4 position. As the market keep going higher, I keep adding more position. Then some people will believe that the market will keep going up higher. No, you must have a target. Even you yourself must have a target, because the only thing you need is volatility at that point in time. What I did was that I went to my 1 hour and 30 minutes on my laptop. I noticed that there's a wedge formation that is it was forming on my 1 hour time frame. So which I noticed, okay, the market is going to start coming down from there, which it did immediately. So what I did was that I left the trade, and I was able to get $100 to $330. That's almost like 1 to 3 risk to reward. So that is how we trade markets like this. You need to be consistent and understand the direction of the market. And today is PPI. Yesterday was CPI. I was supposed to have traded that, and so that I would have posted it so that you guys will be able to learn from that too. So of course, that is because some people trade just fundamental news. This is a news that happens in United States of America. So that is that about that. So I think that is what I need to tell you about this trade. So I'm going to be seeing you guys in another episode. For those that want to learn how to trade, simply slide into my DM or copy my number, or just chat me on WhatsApp, which is +234 8059192524, or send a DM to me on WhatsApp, or just comment under this post, and I'm going to send you a DM. So if you have any question, you can simply ask how I caught this trade. Then it's all good. So we're going to see in another episode. I'll see you guys later. I remain my humble self, Abi Forest. Take care. Bye bye.